You may have heard or read about the benefits of a passive investment strategy built on low-cost index funds. For many investors, a passive ETF is a great choice to meet your investment goals. The ideal situation to use a passive ETF is when you want a low-cost investment, you want to match the returns of the market, and you want the broader diversification of an index. Historically speaking, index investing has proven to be a great investment strategy. Passive ETFs tracking a major index are low cost and have delivered returns stronger than many mutual funds over the last 10 years. Before purchasing any investment, you will need to determine which asset class, equity or bond, is the most appropriate for your goals and timelines. Once you've decided that an ETF is the right choice to meet your goals and determine which asset class to buy, here's what you should look for when picking a passive ETF. Historical performance. Take a look at how the ETF or underlying index has performed over a longer time period. We like to look at a 10-year performance. This allows us to see how the investment did in bad markets. Calendar year performance is also an effective way to track how an investment performs in different market environments. Cost. Be sure you're selecting an ETF that has a low management expense ratio or MER. You should not be paying commissions to buy or sell an ETF. Low tracking error. The tracking error is the difference between the returns of an ETF and that of its benchmark index. Look for ETFs with the smallest possible tracking error. Tax efficiency. If you're investing outside of your RRSP or other tax-sheltered accounts, you need to pay attention to your ETF's tax efficiency. Funds that have high turnover likely have less tax efficiency. Liquidity. Some ETFs have wide spreads between their buy and sell prices. This can happen when the ETF is very thinly traded or when the fund's underlying holdings are not very liquid, such as small cap stocks. Look for ETFs with a narrow bid-ask spread to lower costs. It is always good to get a second opinion when selecting an investment, so be sure to check with your advisor or industry expert before purchasing an investment. For McVeen Wealth, I'm Alex McVeen.